Hi, everyone, and welcome to the Economic Truth Report number 24. And a lot of things have happened. It's a month ago when we published our Economic Truth Report number 23, and we also posted our expose on the Financial Stability Board, which come a little bit into play right now, I think, with their global regulation that's been going on. Usually we go into and we do a market wrap up and look at, the last month or so of markets and what's been going on there. But I think there's a little bit more pressing issue, and we will go through the market report, but we will leave it for after the big financial news that are, developing. It's just started on Saturday, where officially, a bank run broke out at the Silicon Valley Bank, and conveniently, it wasn't a cash run, that you see in a lot of developed countries, a lot of undeveloped countries. It was a bond run because people just, moved their accounts to other banks. And so in order to do that, Silicon Valley Bank had to sell their assets. They got a ton of assets through, the massive, insane boom in 2020, 2021. Tons of deposits, but when a bank gets deposit, it has to have because that's a liability. They need an asset, and the asset is usually bonds. And so they bought bonds in 2020, 2021 when bonds were low. We're told that, interest rates are not going to go up, they're fine, all this fun stuff. Well, what have happened since then is that interest rates have gone up drastically, and when that happens, bonds, they lose their value versus other bonds, so they have to sell them at a loss, and so they're in big trouble right now. So with that being said, that they're in big trouble, let's go and take a look at what's going on. I actually, first, I think we should go into an article that I just wrote yesterday on the topic, and I'm gonna do an announcement. I did have this website up before when it started to get really bad in 2020, and it could have broken out in 2020, but it didn't, and that's a bank run. So I have my website that is going to be relaunched again, and we're going to put it up, and it's going to be a global news site for everybody to go and watch the global bank run. Bank runs happen, which I think they will. So with that said, let's go and share. Hold on, sorry guys. We're gonna go and share the screen here, and we're gonna go straight into the interesting things that are developing. And so this is an article that I wrote, and of course all the stuff that I have discussed here will be in and available online for you to search up all the articles. Now, this article here is probably the best one to go to. I would say it's on my website, theeconomictruth.org. But you can look at my article, which is called SVB, the Iceberg and the Global Financial Meltdown Coming. So, yeah, basically what that means, I think it's not even the tip of the iceberg. I think it is the iceberg itself that's going to topple everything, because when I did a little bit of more research, it's not just, that SVB is a small bank. Let's actually go to, hold on here. Oh my goodness, where is the I'm just gonna pull up. Oh yeah, here we go. I pull up a little bit of information on Silicon Valley Bank, which is worthy of, and take a look at what's going on there. Now we're gonna look at, like, it's a friend of mine that posted some really good stuff as well, so we're gonna go and look at that. But here's the main information about SVB. As you can see, SVB was, got started on October 17, 1983. So it's pretty much my age. Poor bank. Hopefully I won't die at that age. Never know. I'm not suicidal. I'm an 84. This bank is an 83. Anyways, enough of the stupidity here. Let's get into the seriousness of it here. So, as it says in March 2010, 2023, maybe my birthday, I always wish that we could see bank runs. And my birthday is on the 10th of March. Well, no, my birthday is on the 4th of March, and yeah, 6 days after we got a pretty serious bank run. It's not a tiny bank, you know. If you go and look here, let me get the numbers clear here, so I'm not, uh, you know, saying anything that's not right. I think here, let's see here, where was that information? I thought I saw it here, but I just wanted to, before I say it, I wanna make sure that I think it's literally like one of the bigger banks in the United States. You know, it's a global bank. Not very many is talking about that right now. As you could see here, these are countries that they're currently situated in, so it's not a tiny bank. And as I believe, I think it's the 16th biggest bank in the United States. And it's not as big probably in the other countries, but what is very important here is that the bank has 13 offices right now, Canada, right here. It is in the Cayman Islands, in China, in Denmark, Germany, Hong Kong, India, Ireland, Israel, Sweden, the United Kingdom, the United States, and the EU. And so what that means is that it has a very wide array of network. This is mostly a bank that are, you know, given a lot of money. Like it's a venture capital bank. There's a lot of investments from all across the world that are sitting in this bank. In the you know, the Nasdaq. You know, Nasdaq has been plummeting, right, and collapsing. Like we saw 75 to 90% collapse in share values of a lot of these digital businesses. And what you see that is very important here is that um, there's going to be some issues. Now, let's just go down here. This is you know, a little bit of interest for me. During the 2007 and 2008 financial crisis, SVB received 235 million in investment from the federal government in exchange for preferred stock and warrants under the Troubled Asset Relief Program, or known as TARP. During COVID now, we had TALF, Troubled Asset Relief Fund. Got to change it a little bit so it doesn't sound like exactly the same thing, which it was. But so they received $235 million of bailout during the last collapse in our global banking system. Over the course of 2 years, it paid $10 million in dividends to the U.S. Treasury. It then used the proceeds of 300 million to stock sale to buy back government's interest. So basically, they bought back their own shares at a premium of what they had to during the bailout. And so in 2012, the SVB partnered with Shanghai Pudong Development Bank to create a separate Shanghai-based bank to lend to local technology startups. The new bank, owned 50-50 by the companies, received approval by the Chinese regulators to operate in renminbi, so in yuan, making it one of the handful of American-owned banks permitted to do so. SVB also managed two local yuan-denominated funds for Shanghai Yangpu district government. So, so this is interesting. So, okay, so let's go and look at this. We'll look at it a little further soon. But it's interesting here that they're in China. They're running some funds that, you know, the governments are involved in China, so local governments in Yangpu district, and invested in Hangzhou-based loan guarantee company. So they have a loan guarantee company now that their bank has failed. Okay, so let's further here. So you don't see much after this, which is interesting, but then you go into what's going on here. We're gonna look at a lot of other things. But this is a global phenomenon now, and a lot of people are not talking about it as a global phenomenon. I just listened to a Deutsche Welle clip that was talking to the finance minister of the UK, because the bank is pretty big in the United Kingdom as well. So yeah, there's going to be a lot of ramifications there, a lot more than I thought yesterday when I did some research. But just pulling up and starting to look into SVB, the Silicon Valley Bank itself, it has a lot of tentacles around the world. Now, in 2015, the bank stated that it served 65% of all U.S. startups. Its offering at the time included syndicated loans, which is I dabbled in that in the real estate sector, and it's very dangerous type of loan. It's a bridge mezzanine financing loan, which is in between. It's a transitional loan when you don't know if it's going to be very successful or not. The project, this was in real estate that I was in, and yeah, kind of failed a lot of those. And sure enough, a lot of these have failed as well here. And foreign currency management, and it stood out as the U.S. financial institution, as the only U.S. financial institution then working with virtual currency startups. So they're working with, also that's another one as well. They're working with a lot of these, scam cryptos that they're probably out there. So that's very interesting. So that was in 2015, very early, in the play here. So it's been a developing thing. And of course, now they're looking at a lot of more severe things. Let's just go and look at, we're gonna read a little bit from what is going on with the collapse. This is of course the Wikipedia version of it. So we're gonna go into a lot of articles, a lot of insights from Wall Streeters and so on that I have connections with, and we're gonna take a look at see what actually the severe ramifications here could be. Now, so let's just continue here. In 2022, SVB began to incur steep losses following increased interest rates and a major downturn in growth in the tech sector industry, yeah, which I just mentioned, where the bank liabilities were heavily concentrated. Yeah. As of 31st of December 2022, SVB had mark-to-market accounting and realized losses in excess of $15 billion for securities held to maturity. So what that means is basically their bonds that they held has lost $15 billion in value. In early March of 2023, a combination of factors, including poor risk management and a bank run driven by tech industry investors, caused the bank to collapse. So technical background here, but not, of course, the tech sector wouldn't have a run on the bank. It would have a digital run on the bank, which they basically are just moving their deposits elsewhere, and they have to sell bonds to then cover that, and then to be able to send that the bank reserves over to another bank. Now, of course, the Silicon Valley Bank is not an insured bank. Well, it's the Federal Deposit Insurance Corporation Bank, but that doesn't mean much because, as we're going to go into here, they don't have much insured at all, of course, which is prominent with the tech sector. And now they're begging, the government to save them, even though they weren't even protected much by the FDIC itself. But that has shown a lot of these young tech VC guys have no understanding of financial literacy and understanding how bank works. So, with that said, let's just go quickly into, let's see here. The failure of SVB was the largest of any bank since 2007-8 financial crisis by assets, and second largest in San Francisco, second largest in U.S. history, behind that of Washington Mutual. According to Nikkei Asia, the SVB's Chinese joint venture, whose chairman is chairman of Shanghai Pudong Development Bank, said the operations were sound as of March 11th. The UK government announced that they were working on a lifetime British tech lifeline for British tech firms that are affected by the bank's collapse of the bank and their branch in the UK as a part of the fallout from the parent bank. So basically what is happening is that all these tech firms have millions of dollars in deposits, no diversification a lot of these idiots have. So they got their self to blame. I'm not, I don't have too much of sorrow for, their bad choices in life here for not understanding, because these university guys, they don't get told anything of, how the monetary system works or banking system works. So what is happening now is that a lot of these tech companies, which is a ton of, as of like now it's closed. They can't, like, it's like we're in Lebanon right now, where the banks closed, and then people couldn't get their money out of the bank. They were actually physical currency run. Sorry for calling it money, Mike Maloney, but it's actually a currency run on the bank, physical currency run that happened in Lebanon and many places just over the last like 5-6 years now. There's been a lot of these bank runs. Now, this is a highly digital one. And of course, it happened in Canada in 2017, where, oh, goodness, I don't remember the bank, but it was a housing bank. The housing market was about to collapse, and they cut interest rate. And I wrote my damn book in 2017 predicting a collapse in the housing market in Canada, because interest rates have started to rise, and I saw that is a big issue. Well, they just cut them on me into the 2019 repo crisis that then engulfed into the so-called pandemic, which I have my highly doubts that it was just a massive cover for this massive financial crisis that we just had. Now we're in the second inning, or maybe the seventh or eighth inning now, of that financial crisis that started on September 16th, 2019, where the first overnight repo crisis started, where the Federal Reserve had to come in and save these banks by providing low interest, risk-free, basically, that they just print. And there's no problem with cross-lending and so on in between institutions. So let's go into some articles. Let's go into my article here and quickly read through it. Now, these are some interesting points here. I don't know if you could see it or not here. It's a little bit small, but these are deposits. These are like total banks. This is from S&P Global markets. So it's I use them for a lot of data that I can find. I haven't found this data yet, but maybe I should. So looking at this data, this are deposits less than 250,000 as a percentage of total deposits. So what that means is that if you have less than $250,000 in your account, it shows here how much percentage-wise of all deposits are under 250,000 American dollars, which is supposed to be FDIC insured. Now, of course, the total amount of deposits in the United States just shrinks. Like what is current available? Let's see here. FDIC fund has about $129 billion in assets, which just SVB assets are 173 now. Of course, the insured assets are only here, if you look at this, about 2.7%. So it's nowhere near, the total amount that the FDIC has to cover. But the FDIC is taking it into receivership right now. And they're dealing with, who knows? I think we're going to see a bail-in here. And the bail-in, this is here a link to the bail-in strategy that was actually created by the Financial Stability Board, which is the architect of the bail-ins. And now bail-ins was way earlier than what you can find on Wikipedia that they talk about it. I have seen it mentioned in a book by an academic on the Exchange Stabilization Fund from the United States, where he in 1998 mentioned bail-ins, which is basically, if you're, or they like to call it here in Canada, recapitalization. They put it into the budget legislation here in 2013. Right after in 2012 is when the Financial Stability Board proposed the bail-in legislation, which now has become a very, it's a lot of details. Actually, I'll open it for you guys to see it. Now, if you're interested in this, go to my presentation on the Financial Stability Board itself instead, because there I have a little bit of an oversight over it. Here's, what to do when a bank fails and how to close it down properly according to these elites, elite central bankers that are telling everybody what to do. This is all basically a step-by-step document on how to dissolve a bank. Now they have other measures than bail-in. It's TLAC. You heard actually from the recent FDIC meeting, they were laughing at people like believing that the banks are strong, and sure enough, not very far after it got the collapse of Silicon Valley Bank, the 16, well, I think it's the 16th biggest bank in the United States as per what the data says. Now, as you can see here, if you go and look at other banks that has, low insurance that are risky here, like look at all of these, Signature Bank, State Street Corporation, Northern Trust, like a lot of these, a few of these I saw they were posting on FinTwit, and let's see if I could find, where's my document here, guys? Sorry for just a delay here, but let me pull this over here and you can see. Now, so I went onto some of these risky banks that the Wall Street guys were posting about. And I looked at their what I call, there's deposits to what do you call it? There's assets and liabilities. So your deposit is a liability, or asset. The bank's asset is then a debt, which is most likely a bond, or it could be cash. Well, cash is non-existent in banks, and not to be fooled there, guys, but let's go and look at some of these banks. I only look at cash to deposit ratio because I don't look at bonds as real money. And I warned bankers about this, and I had a banker, high-up banker from Royal Bank of Canada here in Manitoba. I sat down with him and talked to him, and he was just laughing like, John, come on, like bonds are as good as cash. Well, was it? For ask Silicon Valley Bank if bonds are as good as cash right now. No, I think they wish they would have cash, to be honest. Well, actually, cash loses value, but at least it's the cash value. What you have on deposit is the same as the cash that you get in the hand, because there's also losses on these bonds. So again, very terrible. So I consider only looking at cash to deposit ratio. Now it's cash and equivalents, though. So essentially, it's just freaking digits in a bank account somewhere. So not necessarily, because it is like if this was JP Morgan, cash and equivalents would be what they have at the Federal Reserve Bank, but the cash and equivalents is probably what they have. Cash plus equivalents are deposits with other banks potentially, right? So due from banks basically. So they're deposits with JP Morgan or with Goldman Sachs or other banks, for example, because these banks are not under the repo regime, the GSIB regime, the globally systemically important banks regime. So that's why you saw SVB fail, because if it was a GSIB, it would be a different story. Then you could do quantitative easing. You could buy all the assets. The what do you call, the Fed could come in and basically buy them out, do repo interventions overnight, buy their assets by creating reserves in their account, which they don't have, so they can't do it. But will they do it through these banks? Maybe. The banks will do the quantitative easing for the Federal Reserve. Do they have it out, Cat? No, I think they're going to get potentially strangled here. But let's take a look at, okay, so I mentioned cash to deposit. Physical cash to deposit. Now, of course, in this cash and equivalents, as I said, there's a lot of digital. So not necessarily all this is cash. It used to be that banks had a separate cash on their consolidated financial statement and due from banks, but not anymore. It's all blended, so it's really hard. And then for JP Morgan and bigger banks, it's all their reserves at the central bank that they got bailed out with during the fake pandemic that we had. So yeah, if you take a look at this, so this is Western Alliance Bancorp, and some of these were on the list, are on the list here. Western is not on here, I think. Let's see here. But you see a lot of, I think these were banks that had deposits with whatchamacallit here, that are involved in this. So, but anyways, I concur. Let's go back to the document here, because these are banks that drop like 20, 30%. Actually, I'll show you here. Is it this one? No. Do I have it here? Maybe I don't. Okay, here, I can pull it up just one sec here. I'll pull it up from my Telegram, which is, I think, where it is. Oh, maybe I didn't post it on my own Telegram, guys. Come on. What's going on here? Let's find it. Oh, here. Okay. Anyways, I'm trying to find it here, guys. Just be with me one second here. Yeah, whatever. You know what? It's fine. I don't need to show you that per se. Yeah, I think these are okay. So, yeah, anyways, let's go back to my article here. But anyways, they were showing banks though, and yeah, back to cash to deposit. I'm just dragging this out way too long, guys. Sorry. So cash to deposits, these are some of the banks that drop like anywhere from 50 to 20%. Yes, no, on Friday. And Western Alliance Bancorp, have cash and due from banks, as you can see, and then deposits. And then it has a cash to deposit ratio, but that's not even cash, a lot of it, of 0.35% of deposits. So if you had a bank run, 0.35%, let's say all was cash. Let's just leave it at all was cash. If 0.35% of the depositor's money left, they'd be out of cash. And if 1% left, only 0.35% would get their money, or 35% of that 1% that tried to withdraw. So it's very dangerous, guys. It's the physical world, and this is why they want to get rid of bail-ins, is that if you had a digital currency, you wouldn't have this problem. You would only have losses on their bonds, of course, that moves in between banks, of course. So back to that, we got PacWest Bancorp, 0.32%. Then we got Signature Bank, which is so I got told by some high bankers that if they have a high cash to deposit ratio, the bank is not run very well. Well, if you had a high bond to deposit ratio, you're losing a lot of money anyways, and your bank is failing. Thanks to you guys. But this is a commercial mortgage lender, I found. I looked at their balance sheet, and a lot of their deposits, actually, as a matter of fact, of the 106 billion of deposits that they have, about 60 of it are in commercial real estate. So very interesting. That's another development. This is Signature Bank, which is one to watch. They have a cash to deposit ratio. Again, cash to deposits, they don't have all that cash. I could swear on my mom's grave that they don't have 27.85% cash, in that bank, because it got so diluted. JP Morgan and Goldman Sachs before 2020, they actually had a cash portion on their balance sheet. You saw how much cash they had, physical cash, which is like nothing at the time. I did some, we can go back to 2019 when I did my initial assessments on banks and the cash deposits, which were more realistic at the time. And maybe I'll pull that up if I have time. But here we go. First, Republic Bank, which has 8.25%. Bank of Hawaii Corp, which has 0.96% cash to deposit ratio. Webster Financial Bank Corporation, 0.46%. And then Charles Schwab, which is a fund manager, has 2.45% cash to deposit ratio. And that was the ones that really dropped severely that I was made aware of by people on Pinterest. So let's go back to our article here. So here you can see the primary. So this is important. You want to see this list of primary dealers in the United States. These are the ones that are going to be bailed out, when things happen. And of course, they're part of the GSIB. Now, what's ASL Capital Markets? I feel like they weren't on there before, but you can see that they're on there now. All the other ones was bailed out in 2019, by the way, and 2020, like all through that repo crisis. So what happened? The banks had bad debt, and they just ended up like doing first overnight interventions, and then they had to do term interventions, and then they basically did the quantitative easing. So they started way before with the quantitative easing, but not in a physical way of actually physically buying the assets. They just delayed the inevitable, which was that they had to buy them. But those are banks, a lot of these banks. And then, of course, you have a lot of global systemically important banks with branches in the United States, like BMO, Bank of Montreal, Scotia Bank, which is Bank of Nova Scotia, BNP Paribas. So those two are. I don't know what ASL Capital Markets are, to be honest. That I gotta look up. Sorry, guys. I should know this. But these are Canadian, and BNP Paribas is Spanish bank. Barclays is English, and then you've got, let's see here, Credit Suisse, which have been bailed out actually indirectly through a credit bank swap that happened between the Federal Reserve and the Swiss National Bank. And we can go and look at that. Yeah, there's so much here that is going on. Like this Credit Suisse is on the verge of collapse. They're at record lows now. Their stock, and so they're another bank to watch, right? There's a lot of weak banks in the world, and suddenly, JP Morgan was bailout for crying out loud during the oil crisis. Royal Bank of Canada, Misa Securities is Japanese. HSBC is Hong Kong Bank. Yeah, let's see here. We got Nomura is another one. And of course, in Japan, there's a lot of issues right now too as well, because there's a lot of carry trade in the currency. There's a lot of cross contamination of assets, across these banks. So, and then UBC's a Swiss bank. Santander is is that Spanish or is it French? Societe Generale is definitely French. Okay, so that is the banks that will get bailed out 100%. Then, of course, they have reverse repo overnight, where you could just put your cash there. So instead of lending to these pesky corporations or to these pesky peasants, you could just park your money at the Federal Reserve for 4.55% overnight, and you're pretty good. Of course, at the reverse repo, there's a lot of government-sponsored entities like Fannie Mae, Freddie Mac, and all their funds. There's ETFs, money funds. Yeah, there's 100 entities that are using currently the reverse repo, which basically are just park their money in a bank account earning interest on it, right? But it's at the Fed, so it's risk-free. Why would you want to borrow any currency to any of the peasants, right? Big thing. As you can see here, these are numbers. Then we're going to go and look at the unrealized losses now. And this is from the Federal Insurance Corporation itself. This article, you could go, if you go on my article, you could go and find the exact article where it came from here as well to take a look at this, which is, look at so the numbers. The numbers are just like insane. Like I'm just blown away, and we're going to show you some more blown away numbers here. But these are the unrealized losses right now. They might be fine, like maybe the Federal Reserve and other banks will just cut interest rates to zero and negative. Oh, then we're in the positive again. So you never know. They might actually cut interest rates, and there's some people that believe that now, even though that, what's his name, Powell was just out saying that we're going to raise interest rates until inflation is taken care of. Well, inflation might be taken care of quite quickly here, but then the inflation that was created this time was an insane amount of government spending directly into the economy, not so much quantitative easing. So as you can see here, the unrealized losses right now, as of current, are sitting at about $675 billion with a billion. If this was like in 2008, as you can see, we put it to shame. Like the losses that no, this was COVID. Look at COVID era. Well, pre-COVID, the repo crisis. These are the losses that ensued at that time. And then look at 2008. 75 billion. Yeah, so it's insane. I'm just blown away by the insanity and the scale of what we're facing right now. It's the hockey stick moment of any monetary standards, and we're really heading into that. If they were to just save and bail everybody out, they could bail both the peasants, the corporations, and governments out. We just have a hockey stick, and yeah, they won't go bankrupt, but we all will go broke because our currency would be worthless at one point. So that is the banks, like the FDIC insured banks issues here. As you can see, there's huge ramifications right now that might change if they cut interest rates to negative or zero negative. But yeah, is the economy any healthier? That's the real question mark, right? Then, it's not only the banks that are facing massive losses, because what happened? Central banks around the world, purchase an insane. Let's just go out there. This is my project that I'm going to talk about a little bit later. But if we go into my report here and look at, the purchases of assets by central banks, so it just takes a little while. It's a big report. You can get it on my website for $59. And then you have unlimited access. It's going to be updated on an annual basis when I change, I track basically central banks' balance sheets on this sheet here. But as you can see, the central bank's balance sheet has increased here. See ECB years like 1.2 trillion to now sitting at 8.5 trillion. So they increased a lot. Like all of them, you can see here, has gone up drastically. Except for the Saudis seem to have a little bit more control over the spending. But here we go. Look at this. Like central bank spending here has gone 2008. This was the central bank's balance sheet in 2008 of the top 10. So this is the top 10 central banks in the world, was 6.5 trillion. Well, by now it's 33 trillion. So what is that? That is a 24, 30. Yeah, that's 55% increase. No, 550% increase, sorry, 55. So insane amount of increase. And as you can see, these are the treasury bonds that the Federal Reserve holds here. We go to Japan, same with their bonds, but their bonds haven't changed. Like they're just pegging up, but they changed a little bit. They got kind of out of control. You see here too as well, bonds. Yeah, around the world, everybody's holding bonds. Bank of England, sterling bonds, Norwegian bonds at the central bank there. As you can see, this is the Mexican central bank. You got the international reserves, yeah. And then Bank of India. Oh, here, securities, treasury bills, yeah, 24%. Yeah, these are as well Australian dollar investments, mostly bonds, right? Saudi Arabia even bonds. So all these central banks have bonds. That's kind of the main thing that I was gonna say here. And so what is happening is that as of like this is the third quarter of 2022, and bonds have gone up a lot more since then. As you had the Bank of Canada had lost $522 million, which is not, substantial compared to their 300 and something billion and the balance sheet. I think it's 380 billion that they sit on right now. The Fed had lost 720 billion of their so that's a bit substantial of their $8.4 billion now balance sheet. Bank of England, 200 billion pounds. The Hungarian bank had lost 200 billion in Hungarian forints. The Swiss National Bank lost 18% of the Swiss GDP. It had 143 billion francs, so that's substantial. That's why you're seeing Credit Suisse in trouble and all that stuff. And of course, yeah, they could create as many of these as possible, but the problem is that That's the backing of everything. Money is debt. If you have anything except for cash, it's just like if you have money in your bank, that's debt for somebody else. It's not cash until you hold it in your hand, which we're now seeing less and less limited of. Still in Canada, it's $115 billion worth of cash sitting around, which is good. So I would say take as much of that as you can. Then, of course, I'm a gold and silver guy, so I hold that as well as a very big protection. Look at we're in a massive debt collapse here, and of course, as you can see, mortgage-backed securities are going to collapse further. And look at this, like this is like again 2008. We're making 2008 look like a walk in a park here. These are, by the way, this is limited equity, so less than 10%. Like, look at this is the amount of homes. Like, this was the financial crisis, guys. Like, this is what created 2006 was the peak. So basically, the next 2 years is going to be freaking terrible if you're seeing this. Look at this there. Like it started, you could see it started building, but it was nowhere near, what it was here. So it wouldn't have been. But then COVID hit and everybody got free money. We got moratoriums. Nobody had to pay their debt. And everybody's using their homes as ATMs, it looks like. Because a lot of people now are sitting on negative. And then, of course, like look at the collapse in prices in homes. Yeah, it's just very terrible. And then as you can see here, commercial real estate. Here, we used to have the real estate mortgage-backed securities have lost, so now it's actually more of it is commercial of the total market cap here, as you can see. The collateralized loan obligations and collateralized mortgage-backed securities, those are commercial mortgage-backed securities, have taken over almost 50%. They were near nothing in 2008. Let's see here, they were very small, like there were maybe like 20% of the market. Now they're more like 45% or something or more of the market. Credit Suisse is struggling, as I said, another bank to really watch here among so many other banks around the world. So we are in a private debt crisis right now, massive one. And then, of course, we're in a government debt crisis. But to find our answer, we only need to go, what is the Fed going to do? Or other central banks here. Go and look at the speech by Ben Shalom Bernanke from 2002. It's called Deflation, making sure it doesn't happen here. And we're heading towards a mass deflationary event. Well, his answer is the printing press always win over deflationary pressures. So don't worry, they will print digital currency. The governments will come out and drop an insane amount of currency all over us. So yeah, we're good. We're good. Don't worry. To just make a comparison here, I just went like this is back when is this 2-3 years ago here, 2 years or so ago, and I went and I stated on LinkedIn, it's like, hey, please debunk these stats. And I went into CDIC, which is the Canadian one. They only insure 100,000 Canadian dollars, which is nothing now. Worth 250 American. Like that'd be the equivalent of, let's see here, let's do some quick brain math here. 140, 280, and then it would be 280 plus 70. That'd be 350,000 Canadian. They only insure 100,000 Canadian here in Canada. Banks are safe, guys. Don't worry. But here I say it's actually 0.0008% of the total insured deposits that they cover. And then, of course, you had, let's see here. Is this the one where it's the CDIC? I don't know if this was the one that CDIC actually. Oh, yeah, CDIC replied here to me. And they said, don't worry, we're going to get bailed out by $25 billion. But that's nowhere near, if a big bank fails. It's just crumbs. But don't worry, we got, our massive amounts of bailouts from the government that we'll have, which is same with the FDIC, really. But yeah, just a tidbit, the a little squabble with the Canadian version here that we had. Now, of course, let's say here that the FDIC creates a deposit insurance national bank of Santa Clara. to protect insurance depositors of Silicon Valley Bank, which is not very many that had the insurable amount, as we saw, 2.7%. So not very many of them are going to get protected. I think bail-ins are coming there. Silicon Valley Bank shuts down, biggest bank to fail since the financial crisis. And here, as you can see, we talked about that they had branches in a lot of other countries. In the UK branch, they're talking about the worries of Contagion in the UK, which is a lot of tech company. Everybody's in tech now. And we're going to see a huge tech blowout again, I believe. That will make 2001 just a walk in a park. And here's the UK SVB website if you're interested. I'm going to post all this and below. Now, let's go and look at, other things that are going on in the economy. Like there's a lot bigger things that are happening. The SVB is massive, by the way. A lot bigger, and a lot of people are brushing it off. It's no worries there. But as you can see, they're everywhere around the world, and they're heavily, heavily in the tech sector. Now, Wells Fargo warns customers of incorrect balances or missing transactions. So, has Wells Fargo been stealing their depositors' money? Well, they stole it through their fake insurance schemes. I remember we had Josh cover that back in the day. And they had fake bank accounts, Wells Fargo. Well, guess who bought Wells Fargo? It was none other than Warren Buffett, of course, is the major shareholder there. So of course it's going to be the most corrupt bank in the world. Yeah, so missing and like they're having outages, whatever. But it's just funny as hell. They're the digital world that we're going to enter in the fourth industrial revolution by Klaus Schwab. It's not as beautiful as they like to show us. Then we got another bank that are failing here. Let's see here. This bank is Silvergate Bank. We haven't talked about that yet. Silvergate and Silicon Valley Bank. The crux of Silvergate Bank troubles can be pinned to the flight of deposits from quarter 2022. The bank deposits contracted from 11 billion to 3.8, which is a massive. They had to sell then, the bonds here, and then they didn't have the currency to protect themselves there. This is prompted by Silvergate Capital Corporation, the bank holding company, to take out $4.3 billion in a federal home loan bank. So that's a GSE, a government sponsored enterprise, government-sponsored enterprise from the United States that are getting backed. Deposit flight continued. Silvergate sold assets on the balance sheet, resulting in a loss of 718 million, which is more than, to put that in perspective, that's more than the current loss, unrealized loss at the Bank of Canada. And this is dollars, by the way, so it's way better, way higher. Unrelated, the Silvergate specific woes, SVB Financial Group also announced yesterday that they would have realized the $1.8 billion loss after taxes. They seek to raise 2.25 billion in capital through the sale of common shares. Blah 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 blah. Anyways, so there's a few banks that are failing, and that's what we're looking for here. This is the systemic issues that are building up. There's another bank here, but this is a hedge fund, multi-coin capital hedge fund, lost 91.4% last year because they were investing in Solana and other things, and FTX and FTT token. So they're just getting whacked by being SBF, Sam Bankman fraud, hanging out with him. Millennials are sinking under the weight of their debts, adding a record $3.8 trillion to the pile last quarter. There's the digital guys. Like maybe that's all the depositors at the SVB Bank that have to add the debt to cover the losses. I'm just joking there. It's pretty terrible, and this is just credit card debt. This is mortgage debt. This is car loans, all kinds of other, unsecured and secured debt. So be prepared for a lot of losses coming in. This is going on right now in the auto market. A lot of losses. American Car Center, which tends to finance borrowers' needs regardless of their credit scores, shut down. all businesses are terminated, all its employees as amount of payments are delinquent. So massive delinquencies are hitting both, especially in the car sector. But this is a big bubble, as I said. It's not just one sector like we had in 2008 with the housing being an issue. $13 billion of bad debt, created the whole housing crisis with all the derivatives blowing up and all that. Well, now we got I don't even know like how much we have now in the trillions upon trillions of bad debt that are slushing around. Um, yeah, I think here's another negative equity. Like you can't have equity in a car. Come on. Like it's even your home is, having equity in your home. I know that people will murder me for this, but your house is not an asset, guys. If your house does not give you an income or produce revenue for you and a positive cash flow, it's not an asset until you sell it for positive capital gain, or otherwise it's a liability. I know that you see it as an asset on the bank's balance sheet because it is. They can take it itself, but look at how much of an asset that was in 2008 when they had $1 homes, so just bulldoze them instead. So tons of losses. Blackstone closest largest CLO issue since financial crisis. So this is again so we got that crisis, and then we have the corporate debt crisis that are coming as well, which is massive. And this is a part of that. You got Blackstone has now gotten into collateralized loan obligations, which I've been warning about, and this is on on corporate real estate, commercial real estate, sorry. And they closed $1 billion worth of a collateralized loan obligation, which is called also a leveraged loan. And these are derivatives. And who's in here? Wells Fargo Securities structured the deal. Wells Fargo Securities, Citigroup, and Bank of America Merrill Lynch. We might have heard about Merrill Lynch from the other crisis. Acted as co-lead managers and joint book runners. Societe Generale was also. So all these systemically important banks are all intertwined, as you can see, and involved here in these. And here, Blackstone defaults on Nordic mortgage bond market. So this is interesting. Let's see here. Is this, yes, let's go into it here. Blackstone Incorporated has defaulted of 531 million euro. So 556 point, no, 562.5 million dollar bond backed by a portfolio of offices and stores owned by Finnish company Sponda Oy, which is their form of incorporated, as rising interest rates hit European property market. Yeah, so basically, with the rising interest rates on such a fast level that the Federal Reserve has done now, you saw like the 2017 then into 2019 collapse. That was only 2.25% over like 2.5 years. Well, this has been around a year, so that they raised 5% basically interest rates. So yeah, it's, as you can see here, SVB. Everybody's talking about SVB, but there's a lot of other things are happening as well, of course. Home prices will sink in the cities that were once red hot as supply starts to overwhelm demand. Of course, so this is the real estate part of the crisis. We talked about the auto loan part of the crisis. And this is not just the United States. This is everywhere. We see it in Norway, like a lot of Scandinavian countries, the UK. We're seeing it in France, Germany. Like they have also had a massive energy crisis and inflationary crisis. So I think we're heading towards a financial reset of the global financial system. But I can go into that a little bit later. But these are the symptoms. And basically, what has happened is that these are symptoms of the underlying issue of our global monetary system being a freaking Ponzi scheme. Like we don't have enough to pay off all the debt, and we'll get deflation. But again, the central bank doesn't want deflation because that'll collapse the whole system. So what happens is that we're just going to get more quantitative easing, lower interest rates. People believe that Jerome Powell will stand tall and fight and raise interest rates to 6-7%. Well, I can just do that, but the calamity that is coming is like, if it wasn't a tsunami in 2006, I don't know even how to describe it. Maybe like more of a supernova. Like if the sun went supernova, we'd be pretty devastated. I think that's what's going to happen to the global fiat currency system. I'm not sure speculation is gone. This is Jim Chanos, president and founder of Chanos and Company, which is a hedge fund, I believe. Believes that the level of silliness and speculation seen in 2020 and 2021, an important moment for valuations. He talks about the biggest fraud, which is hiding in plain sight, and why he believes Tesla has a long way to go down. The ESGs and all these things will go down. Like that's why in my little stock portfolio that I have only commodities. I don't even touch garbage like the tech market. Here again, Credit Suisse hits a record high with their credit default swap. This was the 2nd of March. So the credit default swap is just their insurance on their failure. It's hitting record highs. So that's another big news. Mortgage demand from home buyers drops to 28-year low. So again, that's, when you have a massive drop in demand, prices are going to come down. Very simple. Free market economics. Goldman, it would be ironic if the pricing out of cuts in 2023 cost fallout, which ultimately results in rate cuts. Yeah, so that's what I was talking about there. That was Goldman Sachs that was saying that, by the way. Let's see here. Corporate America earnings quality is in the worst in 3 decades. Don't worry, everything is fine, guys. What the hell are you so worried about? Stop complaining. Delinquency rates on consumer loans from all commercial banks, as you can see, it's starting to tick up here. Now, the normal trend was, here at the low was 2.69. Well, the reason why here is that it went to delinquency like near 1 here is because like people didn't have to pay anything. Fine. So as you can see here, it was 2.46 and really like started to go sour. Of course, it would have been probably like way higher up, like 6, 7, 10%. But it's on the tick up again, and it's just touching, the record lows of 2014 here. But I think those numbers are going to go a lot higher. That's Q4 of 2022. So we only are seeing the start here. And of course, we got all the issues with supply and demand around the world. You got these nations that are, now that you've seen a contraction in US dollars, they can't pay their debts and bonds in Europe and elsewhere. You've seen a lot of financial crisis developing everywhere. And it's all caused by peak debt saturation, as I like to call it, where everybody's just indebted, and who's going to pay and go into more debt to then create the interest needed for the system to stay alive. But it's got to be exponential. It's like a hockey stick, and that's why I see always currencies and systems fail because of that. If you have a debt-based system with interest charge on that, everybody's involved in, which we see now. Let's just go quickly. So I usually do this at the start, but I thought it was so important to do this at the start of things, not at the mid of things here. And I wanted to do the start with the most important news, which is basically the iceberg has been hit, I think. And we're just going to see a lot of freaking crazy things happening, I believe, around the world right now. And who knows what the contagions are going to be. Like we've seen, the FTX debacle is still unraveling. In the crypto markets, you see the now the SVB Bank, that's the tech sector, failing. And then, of course, like the debt bubbles that are everywhere with consumer loans. Also, debt that now, the current bonds, like Trudeau's like, oh, don't worry, I'll borrow. Like, and who knows, was these debt borrows that Trudeau did on the 400 billion the $1 trillion that he created in new debt in Canada, was that like basically bought well, it was bought a little bit by the Bank of Canada, but there's not all the people that hold them and maybe don't want them and sell them. But they could have been 30-year term. So that's why he was so confident about it. He might, little birdie might have told him that the central bank's balance sheets don't balance themselves. Like he's an idiot, but yeah, anyways. So let's go and look here at monthly here. So as you can see, monthly. So the United States dollar has become stronger again. It's starting to strengthen as markets are collapsing again. Look at the Canadian dollar here. The Norwegian krona is again the worst hit currency in the world. The ruble has been hit hard. Pakistani rupee again. Korean won. So if these guys have a lot of American and the US dollar based debt that they have to pay for, there's going to be some huge ramifications here. You got Japan has lost a little bit, and then the Indian rupee strengthened. Oh no, wait. Yes, it has strengthened. So it's the Polish zloty. We got the euro slightly strengthened. No, it hasn't. It's lost because it's opposite pair here. So you gotta pay attention to what's in front here and at the back. Mexican peso has strengthened a little bit. Hong Kong dollar just barely. Swiss franc has lost, and so on. So all these other currencies have lost to the US dollar. Yeah, here's the rest of Europe. Let's look at, so we're looking at monthly here because that's, since last report basically. The strongest ones here again is the Icelandic krona has gained a little bit. You got, yeah, these haven't gained because they're opposite pairs, but zloty, then Albanian lek, I think it is, currency. The worst loser is the Norwegian krona. They're just in massive financial crisis. Their debt levels on a private level is just insane. And the government has been subsidizing mass amounts of their power now. They're spending a whole bunch of money. The government, well, the central bank in Norway had to buy 4 or 5% of the stock market to prop it up for pensioners in Norway and the oil fund. Probably like the Norwegian oil fund just recently lost 14%. I think I might have covered that in the last report that I did. Let's look at the Americas here. And again, losers here, Suriname dollar, Argentine peso. The Canadian dollar is it's hanging out with the peso and the Suriname dollar. That is not a good sign for Canada. So that's why I'm buying silver right now and a little bit of gold again. And I'm not sure if I'm gonna buy crypto yet. I feel like there's more downside here that is coming with the next stage of the financial crash here. So I might wait a little bit on that. And then there's a few gainers here. As you can see, the Costa Rican what? Colon. It's not the asshole. Sorry, bad humor. You got the Dominican Republic peso, maybe Colombian peso loses, has gained. So there's a lot. Some of these are, yeah, it's no correlation really, I think. But there's a few of them that are gained. As you can see here, the Portuguese, no, the Paraguayan currency has gained. The Peruvian as well. Okay, so let's look at Asia quickly here. The biggest losers are Tajikistan, Pakistan, the Korean won, the Malaysian rupee, Thailand baht, Israeli shekel, Japanese yen, Taiwan dollar, Chinese yuan has lost, Singaporean dollar, Bruneian dollar. That dollar though? Let's see. No, I don't think. Oh yeah, it is. Brunei has a dollar. We got Mongolian tenge. So a lot of them have gained, but there's a few losers. Yes, so Sri Lanka is losing, Georgia is losing, Afghanistan, Armenia, and then Laos continues to lose. Indian rupee. No, these are gainers. Sorry, gainers. So the Sri Lankan Rupee is gaining. Also is Georgia, Afghanistan, Armenia, Laos, India, um, Nepalese rupee, yeah, and so on. Then in Oceania, you have the only one that, well, the Australian dollar has, no, these are not gained, they've lost. The only one that has gained is the Papua New Guinean Kina is the currency there. And then you got the what is this one again? All the franc and the that those are all the French Polynesian countries, I believe. That has it. That's lost, and also has the Fiji dollar. In Africa, we got biggest losers here are the Zimbabwean dollar, Zambian currency, the Kenyan currency, South African rand, South Sudan pound, Sierra Leonean. I forgot what they're called, but yeah, Swaziland Eswatini, um, Mauritania, I think, Namibia, Sierra Leone, Namibia. Yeah, all these. I don't want to mention all of them. I know pretty much all of them are Egypt, Uganda, Morocco, Ghana, um, Liberia, Malawi. Yeah. Anyways, and then at the bottom, the gainers here is the Seychelles. Is that rupee in the Seychelles? Yes, it is. And then oh, other ones here are the oh, what is this now? Maurit Oh, so that's Mauritania. Sorry, I was uh thinking about maybe another country. I totally missed on that one that I just said, but Mauritanian uh Uguia. Uguia. I think it's, yeah, I'm not sure if that's pronounced right, but that is strengthened to the dollar. Interesting. What's going on there? We don't know. Okay, so not stock. Yeah, so stock markets. Let's look at month over month. So most of also lost now, but there's a few gainers. Of course, you could take out like Cyprus, maybe, yeah. But the Turkish, yeah, they have heavy inflation, so don't really count. Croatian, Irish, Bulgarian. Like a lot of these are the gainers are not non-NATO members. Some of them are though, but there's a few non-NATO members there. And then the losers, again in Europe, they're still losers here, and stock markets as well. The worst one is Bulgarian stock market, the Icelandic stock market, the Swiss stock markets. So look for some banks here. Serbian stock market, it's down. It's not very big. Again, should invest in Venezuela. That's a joke. Bermudan stock exchange is up slightly. Ecuadorian is up slightly. Everything else is down. The Merval is losing, even though they have a inflation problem there. Year over year, it's up 165%. Yeah, that doesn't cover for all the inflation. Canada is down. Of course, the Brazilian is down. Colombian, Peruvian, Chilean, Jamaican, and Mexican are also down. Panamanian stock exchange is slightly up. We look at here, again, they just had a massive devaluation event there. So they don't count. Sri Lanka doesn't count. VIX is just volatility index. And then we got Mongolia is slightly up. Laos doesn't count. Japan is up, but their currency is also lost a lot of value. Hanoi, and then you got Qatar, I think. It's just slightly up. Pakistan, but they're losing tremendous amount of value. Currency. Hong Kong is down. China keeps on going down. They have a lot of issues now because we're in a global recession. And so a lot of the supply that the industrial base have been powerhouse have been relying on is not demand is not coming in. Let's just leave it at that. And then a lot of these countries here are offering, like Thailand and not Israel so much, but especially Thailand, Philippines, and Malaysia are relying, and even India is relying on exporting to a lot of other countries. Activity is down, also corporate activity is down, so that's why places like India that have a lot of outsourcing hurting. Stock prices are down all over Oceania. Ghana's up, Nigeria's up, but they also have heavy inflation. Most of stock markets are down, as you see, the Kenyan, Namibian, Egyptian, South African, Ugandan, Tanzanian, and then Zimbabwean, and also Moroccan and Tunisian is down. The only ones that are up, it's Botswana, and I gotta look at this one now because this is the one that I mislabeled. Mauritius is up. So that's the stock markets. Let's look at commodities. How are commodities doing? Okay, so gas, this is natural gas is up. Coal has dropped quite a bit. Coal was actually like like last year's biggest investment, by the way, which is vilified, which is hilarious. Oil is down, and this is because we're entering a recession, in my point of view. Gold, yeah, steel is drastically up because, of course, the fake economy in China is keep on building ghost cities. Titanium is up, steel is up, iron ore is up because of the reopening of China. Then copper is slightly down. Silver and lithium has dropped like as a rock because people are seeing that the ESG thing might be a little bit of a scam, and that it's not as attainable the goals that these brainwashed, kids think that they're gonna achieve with batteries. Then we got orange juices up in agricultural sector, butter, palm oil, coffee, cocoa, and then down is wheat has dropped down. Lumber is dropping, so this might be showing that we're entering a recession. Even rice, like wheat, rice, and corn, like people are struggling here, and price they can't afford, so prices has to come down. But when are they going to actually hit the reality? And we're starting to see chaos around the world because of food prices. Food prices, a lot of countries are way, way, way higher. Africa's gotten hit drastically. I have here. Let me just show you here. Where's my world food inflation here? I'm just gonna quickly show you like how bad it is. Well, you're just gonna have to like remove some. Like this is Zimbabwe food inflation, Lebanon food inflation, Venezuela. So as you can see, they're way higher. But then I had to remove them. So then you got Turkey, Argentina, Iran. Like look at these food price inflation, 64%. Can you imagine if food prices raised this much? Actually, in Norway, I think it was like 30 to 60% in the stores, but officially Norway is like way down. I think I don't know if we can find them here. Might be hard. But even in the United States, 10%. Who has a little bit of a drawdown here? Liberia and South Sudan, which is yeah, not the best economies. Good for them though. But as you can see here, Nigeria, Bulgaria, like all these countries have what 30% almost in just food inflation. Official. Let me just say that. So yeah, let's go back. Where was I here? Oh yeah, here. So then we got industrials. As you can see, there's a huge drop in a lot of industrials, urea, ammonium, nickel. Like these are important industrial. I think there's zinc as well. They're all down, as you can see, most of them. Aluminum is even down, manganese, the ammonium, lead is slightly down. And then you got a few that are up, but not very much. Like these are just fine. As you can see, a lot of them are priced in Chinese because they come out of China and they run out of Chinese exchanges, which is interesting. Food, eggs are, there's a massive egg crisis in the United States, but it's also, I was saying that it's caused by the fake bird flu that just kill off all the birds, and then you got an egg problem. Eggs come from the chicken. We can discuss what came first, the egg or the chicken, but when you kill all the chickens, you're gonna have no eggs. It's gonna be simple as that. You got poultry is up quite quite a bit because of the same, as I said, the bird flu that they're murdering like all these chickens. Salmon is up slightly. Feeder cattle, eggs in China is up. Then lean hogs, live cattle, and beef is down slightly. I also heard that the beef supply is now hitting record low in supply since the 60s or something. So we're going to see potentially in a year or so, we're going to see massive beef prices again. The more inflationary pressure coming down the line potentially. Okay, yeah. So that's oh, we got to look at bonds and crypto first. So with bonds, I only like to look at the United States, but yeah, because they're the predictor. Like as you can see here, these are severe drops here. So like March 9th to the 10th, like look at here. Just gonna go there. So we had what 3.92. This is the 10-year was at 3.9.92. Then it dropped to 3.69. So that would be hold on, quick math in my head. 23 basis points, which is an insane jump. Like you don't see this much. Like you saw it here. That was a big one actually, 4.15 to 3.85. Another big one, just singling, but this was when the downturn starting, like the first part of the stock market crash happened. Let's go and look at similar moves. Like as you can see, they're not as drastic here, but this was when they basically cut interest rates down to zero. And then they started raising interest rates. So let's go on a bigger scale to see like look at the drasticness of this gain here. As we said, the rise of um, interest rates rise, hikes that is happening here. Now, of course, the yield curve is totally inverted, which is predicting that, near term, we're going to have a recession. We are in a recession, in my point of view. So we're going to see a lot of turmoil coming. Then, of course, the longer range now it's dropped a little bit, but it was as high as let's go back and check what the peak was here. 5.28 was the high. Now it's down at 5.12. So did you see that a interest rate cut is coming? Maybe. So, anyways, the bond rates in the United States are telling us that it's going to fail, and of course the bond rise that you saw there, that's what caused the SVB crisis, SVB crisis and the Silicon Valley Bank's crisis, because they have now losses because their bonds are worth a lot less than the ones that are yielding more. It's pretty obvious, right? Like why would you have a 0%, well, 0.1% bond, let's say, versus a 5% bond? That's a couple hundred percent higher, 1,000% higher. Here's the crypto markets monthly. Ether is up slightly. Tether, which is the US dollar, so like and I think it's fake garbage. Then you have Litecoin has actually drastically lost here. Avalanche, yeah, all of these have dropped. Again, it's not a big mover. But here we go. Here's Monero. It's not a big mover, but it's stable, like a lot stabler than others. Bitcoin Cash has even been quite stable, but Bitcoin is down 2.19%. Is it going to go down lower? I think it might, if you're going to see the crisis continue in the stock markets, because people are going to have to find assets somewhere to sell to then cover the losses in their margin. Actually, talking about that, that makes me want to go and look at something here. Sorry, guys. Just tried to find it here. Oh, that's not it. Yeah, I'm just trying to find. I had a very interesting. Oh, that's my. Yeah, sorry that it's taking a little bit of while there, but I found it would be interesting to see here. Damn it. I had a really good one up here. No, it's not that one. But anyways, the markets are really struggling and things are not getting better, just to say the least here. So yeah, anyways, I think I can tell you that from my head that market debt has collapsed, and that things are a lot better now with margin debt, like with debt in the markets, but there's still a lot of issues. I was going to look it up for you, but I have now found a live chart of that thing, which is updated quite well. But anyways, margin debt is still at a high level compared to 2008. So that's the debt. And then when you get crashes in the markets, you have issues, and you have to basically pay that, and then they cover it with good assets like gold and silver. That's why I say gold and silver and crypto is just collapsing at the same time as the stock market. Iran and Saudi Arabia agreed to resume relations after China mediation. So again, the two they really hate each other. Israel really hates that, of course. They're Shiites and oh, what's the other? It's a religion thing between Saudi Arabia and Sunnis and Shiites or something like that. I forgot. Uh, Forgive me if I don't remember it right. But again, they are assuming their relations, and I bet you Israel is not a fan of that. Taxpayers to spend $680,000 per job for Ford Marshall's battery plant. Again, we talked about the ESGs here, guys, and $680,000 per job because you create a job. Okay, how much paid is that job? Um, let's just say it's 100,000. Let's say you pay about $20,000 in tax on that. So the taxpayer spent 680. There's some corporate revenue in there, but let's just take the new job itself and how much tax revenue that would create. It would take, let's see now. Let's just quickly do the math here for you guys. If we do the math here, bear with me. 680 divided by 20,000. So we take 34 years per person. It'd be just in the positive of the initial cost of that job. Yeah, so again, the government doing things, it's just beautiful how much the disregard for, running something properly is in government. Biden budget would cut deficit by $3 trillion over the next decade with 25% minimum tax. So is he going to run a surplus then? Because right now he's running what, 1 point something deficit. So that's pretty good. Surprised by that. Democracy's global decline hits possible turning point, report find. Like, look at democracy in Canada. This is such a joke because Justin Trudeau just had dictatorial power, took away people's bank accounts because it just didn't like what they had to say. So Canada, this should be opposite. A lot of these. Now, this is where some friends of mine are, like down in Uruguay. Small country, not very big government, which is good. These days, you want to be at a place where there's smallest government possible. Uh, the government there is not even that corrupt, which is great. But again, like democracy here, Chile, yeah. So again, you're seeing whoever they dislike is at the bottom end here, but a lot of times it's the opposite way as well. Like Norway and Sweden, democracy is, yeah, whatever. I guess that could be it. But democracy in itself, Hitler and Stalin was elected in democracy. So I just had to mention it. The CIA says that it's already fighting Russian Wagner mercenaries abroad. So they're basically fighting directly the Wagner Group, which is basically the special forces on both sides fighting each other now directly in a war. And that is so great. It's fantastic. This whole like proxy war is now like is so close to being a full-on global war, because you're seeing the axes and allies, developing around the world with, Russia and China getting, closer together with a lot of allies over there. This SCO allies, the Shanghai Cooperation Organization versus, the IMF/NATO group is joisting it out there. And now you're starting to see more direct implications in Ukraine over the fight. It's basically a war between, it is it is a resource war in my point of view as well, because Ukraine is the breadbasket. There's also Russian pipelines going through Ukraine that they want to secure, and that's through Crimea. That's why they annexed Crimea back in the day when, of course, the U.S. Had a coup with Victoria Nuland orchestrating that in 2014. And so there's always been a fight of who's going to have the puppet in Ukraine. And as we can see, it's heating up. It's not calming down. There's no calmer heads. Let's just nuke each other and get it over with. Bunch of crazy morons and narcissists and sociopaths in public office right now that are totally devastating our nation states around the world. So yeah, that's fantastic. BBC conspired in the campaign affair that kept Britain locked up. Yeah, so actually there's a WhatsApp that came out, and it's kind of hilarious because it's between. I don't know if I posted it on my Telegram here. Let me just see if I have that interaction between the two here. Uh, yeah, maybe I don't. I do post a lot, so maybe it was here, maybe it was not. But anyways, it was Matthew Hancock basically saying that they should scare the crap out of people to lock them down. So conspiring. Then, of course, January 6th footage just came out that the general peasants were allowed to see, and hilarious. It's actually shown that it's not as drastic as they let out to be. Then in Oslo, they have now exercises around Oslo for war. They get ready, to fight the Ruskies. They've up north in Norway, where I used to be on the border there. They beefed up with the Panzer Battalion now, just east of Garnisone Sør-Varanger where I was, and then they beefed up the GSV quite as well. They consolidated we used to have 5 satellites on the border, plus we used to have a operation center at the base, but now I think it's like 2 or 3 major ones, and then like operation centers, and then they have, of course, we're on the border, we're on the policing on the border as well there. But yeah, it's up north, and of course they put the missile shield, the defensive missile shield of NATO on the border to Russia there as well. So very interesting developments as Norway prepares. They're talking about in the Norwegian newspapers that they need a lot of more funding for the war measures to protect themselves from war. Australia to phase out live sheep export amid opposition from peak farmers' body. So I guess maybe they're starting to like become more nationalistic, or they just want to stop us from eating meat. The Trudeau family's weirdly close relationship with Communist China, not only to mention, his good relationship with his dad had with Fidel down in Cuba, of course, and Trudeau's look-alike looks like a mini Castro, and he acts like one for sure, but now he's looking like one. Former top Credit Suisse shareholders sell full stake in bank. Well, the SVB, the top shareholder there, sold his share as well. This was back in let's see here in yeah, this is March. This is March 5th. So again, you've seen that. So I think we're seeing this might be it, guys, the big one that's happening when banks start to fail. And of course, the Credit Suisse is very different by SVB because it's a globally systemically important bank and would be bailed out. And it was bailed out just recently. It might have to be a lot more Because what happens is, let me show you this. This is what happens. I'm tracking this on a weekly basis, but this is the liquidity swaps they're called between central banks. And as if we go here and see, okay, these are the most recent. Hold on here. If we go down, I think that they're right now they're bailing out banks in the European Union. As you can see, it's intensified a bit here. They also bailed out Bank of England, so this is the Federal Reserve bailing them out. Bank of Japan, they're bailing out. But here was the latest one. No, sorry, this one on 19th of October, where they bailed out the Swiss National Bank 11.09 billion US dollars. So again, they're bailing them out, and they're in some deep issues. Let's see here. Yeah, so that's that one. And then Mark Mobius says that he's having issues with getting his investments out of China because, of course, they were duped by a lot of big hedge fund guys. Like, yeah, I got to go into China. But now China's then like, well, maybe we should do what the Americans did to Russia and just take these oligarchs, these American Penske oligarchs assets, and freeze them, or make it impossible for them to access them, just like the Americans did for the Russian oligarchs. So it's a big geopolitical game going on there, of course, being fought over energy and the failure of the fiat currency system. Let's not make fools of that here. The U.S. Treasury introduces CBDC working group discuss potential for routes for the digital dollar. The CBDC, of course, that'd be the detriment. You don't have. They would stop bank runs though, which would be great for them. They would love that. But it's going to be the detriment. And I think the big crisis, if everybody loses their money in this crisis here, and you could just come over to the new CBDC and they'll reimburse you with the new asset prices, and you'll basically lose nothing on what you had, but now you're a slave forever in the CBDC. Can't take out cash, can't have any private transactions. The government will trace and track and trace everything that you're doing. Record bank run drain a quarter or $442 billion of SVB deposits in hours. So that's why it was shut down, leaving it with negative $1 billion in cash. Well, cash or cash. It's investments available to be sold, not cash. Cash is cash. Cash is physical cash to me, not, like bonds are not cash to me. It's bonds are trash. Cash is trash, but cash is way better than bonds, as it's something, but it has a value to it. Bonds are digital now. They don't have a bond certificate anymore, like the who do we have here? I have like a historical, yeah, there is, like, it's a historic thing of the bonds from the Rothschild family. They were so fancy, these bond certificates, getting interest rate annually and so on. China is building 6 times more new coal plants than other countries. So clearly China doesn't give a crap about ESGs, which is understandable. This one here we don't need. Cannabis company BC gets approval to process and sell cocaine. Maybe they should, if they really were to make a lot of money, just go to a lot of the, especially, well, maybe California and to New York, to the finance centers, and then sell cocaine there. They would make a lot of money, better than what they do in Vancouver, probably. Sell to the bankers, cocaine and money. Making money triggers the same part of the brain. It's fun. Epstein linked Clinton aide suspicious death ruled suicide despite being tied to a tree, shot in the chest. I love these suicides. Oh, like there was even like during the crisis of bankers. But when was that crisis? It was I think 2015 in Europe. Like there was just bankers, shooting themselves 20 times with a nail gun in the back of their body or something. Yeah, this is a great suicide, but you get tied to a tree, shot in the chest. Yeah, yeah. I do that to myself, like morons, and I'm not suicidal, guys. Just let me state that very clearly. I will never die. I want to live until I die of old age. Anyways, back to the last part of the news here. Shock and impossible gas bill push restaurants to the brink of closures, more higher prices, and then of course they want to ban, natural gas ovens that most restaurants use because it's very clean and very great for cooking. Woody Harrelson, Saturday Night Live's monologue about COVID sparks debate. Max says he was spot on, and I totally agree. That was quite fun. The panic that about the lockdowns and the shit that they did is unforgivable. With these corrupt politicians and what they did. So they should all is go and rot in prison, in my point of view. And I'm very calm about it. But they totally destroyed so many people's lives, families' lives. The animosity that was built upon just like in my family itself here. Like I'm just really angry at these morons and what they did to everybody, and everybody was just brainwashed into it. And of course, Hancock scared the crap out of people to agree to the lockdowns. So these guys are just corrupt politicians. They're trying to brainwash you into stealing all your money, and they're a whole bunch of corrupt morons running around in government, just basically wanting to destroy your life because you're a peasant. And the government, when are we going to realize that the current governmental structure, so-called democracy, it's not for us, it's for them to control us. We're in a feudalist system. We're ran by these politicians that believe very highly of themselves that they know better than everybody else. So anyways, I think that was it. Oh yeah, and I will go into the last things that so I worked on, you saw the central bank project that I've been working on, which is a lot of hours. I think I worked like probably like 100 hours on this thing, collecting data, creating great charts to give a lot of insights into the central banking of the world, what kind of assets they hold, and all this stuff. It's very interesting. And I also do cover gold as well, which is pretty cool. If we go down here, is this it? Yeah, top gold holders. So I pulled data from gold.org. And so you could have that as well. Yeah, and it's very neat. Like there's a lot of cool things you could do with charts, and I like this one. This is the global historical gold holdings by central banks. As you can see here, I have one that moves, so you can actually see directly like how geopolitically the moves are. This is 2008. Let's see what happens there. Switzerland sells down. It's gold here. IMF sells down gold. Yeah, you could actually see them physically selling down gold in quarters and so on. Pretty cool. And then I want to show you something else here as well. Where is the last one I had up here? Sorry, guys, I gotta find. Oh, here. So since we're having backgrounds, I'm gonna, by the end of the day, I will have this up and running again. I used to have it in 2020. I thought that was it, but of course it was not. They just printed oblivious amounts of currency and increased the currency supply. But as you can see here, it's a map of bank run possibilities. I'm gonna actually, so there's a website that I'm about to create. I'll probably be done with it by the end of the next week, but it's bankrun.org. And it's gonna be a new site for the banking sector, what's going on, because I do believe that we can see a lot of calamities happening and lots of bank runs around the world. And Contagion from these SVB and Silvergate and other bank, Credit Suisse and so on. So just be prepared. There's going to be a lot of interesting things. You see Switzerland is 2 here was at the time, but now it's going to be a lot worse, guys. You had Germany at the time. You had banks in France and you. Hey, this is from when? The 20th of April. So this is right after the massive financial crash that we had. So you can see the risks now. The maps have changed a little bit. Now this is a 5 right now here, for example. But yeah, look forward to that. That's going to be bankrun.org. So that's a big website that's coming. And that's going to be a new site. So get prepared for that. And then hopefully you could send some donations over to that site and to myself, because it takes a lot of my time to put all this together, and it's I think my time is worth a little bit of money at least to give you insights into what's happening around the world, and especially the risks with banks, because most people today have bank accounts. So I think it's going to be very valuable information for you to have. Anyways, I think that's it for today. And of course, go to my website, theeconomictruth.org, to find out everything about what I do and what I'm up to. You could find my Economic Truth Report. I do post it to both YouTube and Rumble, but I do suggest you go to Odyssey because I support these guys. Odyssey is a real free speech platform, and I highly suggest you come over there and start using the platform. You can make a little bit of currency as well on there. And I would highly suggest that's where I, post my reports. This is number 24. It's been a while, I think I've done this for almost a year now. So, but stay tuned, guys. There's going to be a lot more happening right now, and maybe I'll have to do it on a bi-weekly basis now, because of all the crazy shenanigans that are happening. So stay tuned, guys. It's going to be very, very interesting. And this is John Sneisen, reporting out from The Economic Truth, and I'll see you soon. Bye, guys.